Here we've got a near 3-hour power 2.0. So power 1s and power 2s are generally going to trigger during times of a potential counter trend bounce. And these can, of course, turn into full-blown reversals, or you might just end up with a brief bounce before the trend continues. Let's replay the price action on this one and see what we can see. As usual, on the chart, we have the horizontal lines in the background generated by the meta signal support and resistance indicator, and our usual EMAs and SMAs. Coming up to the time of the alert, we have a downtrend, a series of lower highs, lower high, lower high, lower high. We've got the SMA 9 in magenta crossing below the yellow EMA 21 with price action pulled up into the cross and just above it and then swiftly rejected. We come down to the candle of the alert here, and then we open up on the next candle. So the stop loss close below value on this one is 3.5949. For the sake of sanity, we've got it here on TradingView at 3.5950. Again, for those who haven't read the website or remain a little bit confused, we choose not to exit without a close below this stop loss value. So when we say close below, if it's a 3-hour alert, then we want to see a 3-hour candle close below this value before we exit. Why do we do that? Well, over time, the results are better. It also means that you have to monitor the trade. In this case, every 3 hours, you would have to check, have you closed below? If you have, you need to manually exit. So we're putting together a solution for that, working with another team. I expect mid-February, we should have this new tool set up that will allow NFT holders to place trades with the stop loss close below logic intact. Let's take a look at how this played out and see why it mattered. We've gone and wicked below the stop loss close below value a couple times. I think right here we went to 3.5930. So if you had put a static stop loss, you most likely would have been knocked out right there, depending on whether you're using mark or last price for your stop loss. You did get a move up to TP1, so perhaps you were able to get out right there and immediately came back and wicked below the stop loss. So this is a good example of why do we wait for the close below. Here we came extremely close. We closed at 3.5960. The algo said 3.5949. So we didn't close below, we didn't exit, we didn't lose the trade. There's a number of people that are saying, look, why can't you tell me to enter, here, enter lower? And well, really what they want to know is the exact low. And that's not what's being offered here, at least in early beta. We're not telling you when an alert triggers that this is the low, ramp up the leverage to 50x because you're going straight to TP3 and beyond. We are telling you, hey, there's potentially an interesting setup here. Pull out the chart, have a look. In this case, the indicators that we're using at the top here, we have the jewel, blue above pink, getting up there. It's below 40, but that's below 30, below 25 is a little bit more interesting when you're talking just blue above pink and you don't have yellow down below. You're not coming off of any bullish divergence on RSI. BBWP was high back here and it's just been contracting and it continues to contract. So that's not especially exciting. We'd rather see it expanding from low levels. It doesn't mean that price can't go up though. And then PMARP is down low on longs. We want PMARP below 40, 50, depending on the time frame and the alert type. So you had some variables here in your favor. RSI especially below 50 with no divergence, no bullish divergence, probably was a signal that, hey, there's a better entry available here. If you had just gone the lazy route and entered on the SMA 9, that would have gotten you in right here, say 3.6632. That would have been a better entry. If you don't want to use this stop loss close below logic because you have a life and you need to sleep, we fully understand. The solution is to look for better entries. If you're right above the SMA 9, RSI is below 50, there's a decent chance that you can come in, get an entry around the SMA 9. That's the magenta line here. When you get that lower entry, it also means that you can push a static stop loss lower than what we're calling for on the close below value. So where would you push that static stop loss? Well, you've got your prior wick low right here, and you have the meta signal support and resistance indicator giving you this key line right here. It's a Fibonacci based indicator, but it has a volume component, so it's not going to be the same levels that you will see if you pull a standard Fibonacci retracement. So let's call this our new static stop loss. When we do a static stop loss like this around a key fib, we like to go a little bit below, give it a chance to come down and wick. Let's see how it played out. So let's say we had entered on SMA 9 and we don't want to go with the close below logic. Okay. Your static stop loss is down at 3.4399. All right, what happened? Did you need this much room? No. Was it smart? Yes, depends if you're a conservative trader or an aggressive trader. If we were using a static stop loss, this is where we would have put it. As it so happens, we come down and wick what became the new support and resistance level. So these levels will change as more volume and price data is added to the chart. So perhaps more importantly than this line here is just the prior wick low. So it came down, tested this area, and took off. If you're using the close below logic, well, good for you, because it didn't close below and you were able to stay in the trade and ultimately go up and take out TP3 for an RR of 3.02. If you had aped in immediately, which a lot of people seem to want to ape in immediately, even though we again and again encourage you to look for your better entry. But if you had just aped in with the close below logic, you would have survived, but it wasn't necessary to cut it this close. You know, you look for your better entry, push the stop loss down. If you want to keep the same stop loss that close below value that's offered on the alert, great. That would have given you a much higher RR trade. But then, of course, you're flirting many times with potentially being knocked out. So again, these alerts are meant to be used in the context of your own technical analysis. They're not meant to be blindly traded. Let's take a look at when we got moving here, what was happening on the chart. So I'll get another vertical line. So right here, we start to see something that's much more interesting actually than the time of the alert. On the jewel, we've got blue rising above pink. Again, it's higher. It's above 39 right here. But we have DMI supporting it, this green line here. Back here, DMI was red. So blue more than pink, both increasing with DMI on your side is more enticing, shall we call it, than blue more than pink, pink floating sideways, DMI against you. RSI, obviously you have a much stronger RSI here. You've gone up above 50, and more than just being above 50, you've pulled far away from the RSI EMA. BBWP, this especially looks a hell of a lot better than the initial signal. You came down and flatlined at 0, and then BBWP increased, got above the BBWP MA, and at the time of what I'm calling a secondary alert here, we're at about 20% coming off of 0 with a steep vertical incline. That looks good. Why does it look good? It means volatility is expanding. What direction is it expanding in? Well, the Joule here would tell us that it's likely to expand upwards in terms of price action. Volatility itself, direction neutral, of course. PMARP, it was getting up there. So the reason the algos didn't trigger this alert is because when you get PMARP above 50, 60, 70, your win rate comes down. So the algos triggered this preliminary signal, and once you survived the price action that occurred here, this was more your signal that, look, things have changed. Yes, PMARP is getting up there, but I have the power of this initial alert on my side. And I have a better looking Joule signature, a better looking RSI signature, a better looking BBWP signature. Stochastics have just crossed, turning to the upside, coming off of near the 30 level. Everything looks good on this secondary signal here. So if you had survived this action, this suddenly looks very good, and it's a point where you could put on more size, you could pull your stop loss in closer. Perhaps if you had waited for this big candle to close here, perhaps you put a stop loss, enter again and put a stop loss below the SMA 9. That's usually going to govern or protect the longs. If it is going to take off, you're usually not going to get a chance to come down and grab an entry at the SMA 9 once it's ready to go. So that could have been a secondary trade right here. Or if you had survived this price action, boom, you got 3.02 RR. Came rather quick once it decided to go. I hope this has been helpful. We'll see you in the next one.